Ryan Dents, after a weekend of pretty heavy crypto market volatility. G'day, how you going?
Yeah, not too bad considering, as you can
Not
tell,
too
I've not
bad
really
considering.
had time to shave or anything, or even brush my hair. The beard's got longer, a bit grayer as well. So, yeah, it was a tense market for crypto watchers.
Well, considering you're not looking too shabby, mate. So let's talk about that. I mean, obviously, uh, Bitcoin especially had a wild ride over the weekend. Do you want to just give us a rundown of that, and then we can maybe talk about a few of the reasons what was going on there?
Yeah, so just to give the book a synopsis of what happened. So, things had pulled back a bit in Bitcoin prices since the highs of, Bitcoin hit $69,000 earlier this year at the high a few months ago, a couple of months ago. And it was trending down, but to me, it actually looked like a bit of a pullback at the time. Didn't look like, a disastrous fall. And I was looking at the on-chain activity, which shows you what's happening to Bitcoin. Are any big holders selling? Is it coming off exchange addresses or onto exchange addresses? And there was no signals there that anything was amiss. If anything, it looked like a pullback buying opportunity. But then late on Friday night, you can see this because it's all on chain. A big whale, so a big holder of Bitcoin, dumped a lot of Bitcoin in a very short amount of time. Now, this happened on Friday night, which, Bitcoin's a 24/7 market. And this is probably a time when there's not as much trading going on. At least the professional money is sort of out of the picture. And it was at a sort of key price level in terms of support. Like it was on a uptrend line. It was at a bit of a horizontal support as well. And what happened was when that price breached, it just caused this cascade of liquidations from people who are leveraged up. So there's a lot of traders in crypto, and I don't know why they do it, but they leverage up their crypto bets. So they go 5 to 1, 10 to 1 on what they put down. And so small movements can make a big difference to their profit and loss. And what happened was when that price level breached, all these leveraged traders one by one got liquidated, which then creates more sell pressure. So you had this cascade effect. And you can see it in the statistics live online. Like I was watching it as it played out in real time. There's not a lot you can do when it's happening, but you could see it just was going down $1,000 in minutes at a time. And you could see on the on-chain stats, there was the leveraged traders basically getting liquidated. And that had to run its course. So now we've got like a completely deleveraged Bitcoin market. It hit 42,000. Suddenly all the leverage was out of the market. I think $3.2 billion worth in a matter of hours. And suddenly the price bounced back up to $49,000, which is around about where it is today. Now, when Bitcoin falls, the whole crypto market tends to follow. So you got a lot of altcoins falling at the same time. Although initially some of the Ethereum-led ones didn't fall quite as much, but they all did fall because they all follow Bitcoin's lead. And so now you've got today, it seems to be trying to settle down, but inevitably what happens with crypto is once you've had these bouts of volatility, then fear comes into the market. And according to one of the sentiment figures I follow, we're at a pretty extreme fear point now. So that's not going to wash out, in a day or two. That'll probably take a few weeks, probably, maybe even months to play out. But that's happened before. And what I tried to, I'm putting out a note on Monday. What I want people to try and see is this is not unusual for cryptocurrencies and for Bitcoin. It happens a lot. It happens in bull markets even. We have, even more volatility in bull markets. Sometimes the pullbacks can be vicious and then they recover before it goes up. But you've got to remember that, Bitcoin a year ago today was around about $19,000 a Bitcoin. And today we're at 49,000 and people are panicking. You've sort of got just to expect this volatility. It's never pleasant, and it never, even I've been in it for 8 years, and when it happens, I'm still looking at it going, what do we do? But that feeling sort of washes over me fairly quickly, in a matter of minutes these days. But if you're brand new to it, it's like, compared to say stock markets, it's ridiculous. But you've got to remember that volatility comes with the territory, and the key is to zoom out and stick to your long-term strategy. And over any meaningful time period, and I'm talking about a year plus for Bitcoin, you're making the best returns compared to gold, compared to stocks that you would get over the last 12 years. So you really have to stick to your long-term strategy. Times like this can make it tough, but I think that's why we said when we did like the Bitcoin recommendation, we said dollar cost average.
Yeah.
So if you are doing a dollar cost average strategy, this is the time to keep on dollar cost averaging. It doesn't mean it won't go lower in the short term, but that's the whole point of dollar cost averaging. You're going to buy more Bitcoin when it's cheaper, and you're going to do it regardless. If you're in like the Ethereum strategy that we just recommended, start staking your Ethereum. If you were staking your Ethereum, you'd be actually sharing some of the huge amounts of fees that just got generated with all the trading over the weekend. And if you're in the DeFi strategy, which we recommended recently as well, one of the pleasing things about these things is their stress tests on the whole system. And as far as I can tell from following my Twitter feed, there's not been any massive failure of these systems to work. The people have been liquidated and lost money, sure, but the systems themselves are working fine. They're working as they're supposed to. There's not been a systemic failure like there can be sometimes in the traditional finance system. So if you look at all that, then the arc of technology is only going one way, and that's up. And the signs from this are actually very positive.
Do you have any insights into what was behind the selling? You mentioned the whale, which kicked things off, and that obviously triggered all the leverage trades. Generally, someone only dumps that amount when they're a forced seller. So, do you have any insights as to what caused that? Or
like, I've read conspiracy theory notes, and I don't know how much weight to put on them, but this is the thing I would probably point to. If you look at the top 100 Bitcoin addresses, which you can see on chain, this dump wasn't caused by a bunch of them all selling at once. If it was that, then you could suggest it's more of a broader macro theme or a broader crypto-related theme where they were nervous for some reason. It wasn't that at all. Of the top 100, it was one big dump from a really big holder, followed by a second dump from another big holder. And the rest of them haven't even sold all through this. So it suggests to me it was a player doing it for whatever purpose. Now, the conspiracy theories, now I'll put them out there just for the sake of people to consider, was, you had Hillary Clinton come out last week saying that Bitcoin was a threat to the US dollar, the primacy of the US dollar system. And if you think about that statement from someone as, I won't say popular, but, as prominent as her, prominent as her and connected, exactly. What a big sea change is that for the establishment, not to just ignore crypto and say, oh, it's tulips, it's a joke. Now they're saying this is a threat to our system of money, our control over money. And so if that is what they're doing, and, the US government and its various agencies can easily buy Bitcoin, using fiat money and sell it and try and create these situations where people panic sell. So that's one theory going around, mainly due to the timing of the dump. And like, for example, if you're a big holder and you're trying to sell, you generally don't dump like that. You generally ease it into the market so you can get
that's what I was getting at. And you don't do it on a weekend, right?
You don't do it on a weekend when it's thinly traded. And look, I wouldn't be surprised if that is the case, if it is like a targeted move, further to be follow-up news stories this week stating the usual bad news stories about crypto. There'll be stories about regulation or the environment or the Biden government is going to crack down on it, or something. Usually that's what happened. You hit the price first and then you follow up with a fear campaign. Now, if it's to destabilize crypto markets, it probably will work to a degree, but I don't think it will shake off long-term holders of Bitcoin in particular, because a lot of them have been here, done that. It will have an effect at the margins and it will shake out some weak hands, and we'll see how far that affects the price. But we've seen that last time there was a big dump from 69,000 down to 30,000. It hit 30. They tried to breach 30,000 3 times and it didn't breach. It was like the people there were like, well, we're not selling. And then once that fear had exhausted, we suddenly saw a rise from 30,000, almost doubling with 6 weeks later. So you've got to remember, volatility in crypto works both ways. It's hard when it's against you and the price is going against you. But I don't know if I put this out in the note, but the best decisions with hindsight since I've been in crypto have generally just if these situations hit, do nothing, because you're not going to time the bottom and it's probably too late to sell out now. So sitting tight would generally have always been the best decision I could have made. And I've not always done that in the past. When I first started, I have, I think I panicked sold. I've probably told this before when Ethereum crashed from $20 to $12 when I was first in crypto in 2016. Now, if you think about it, Ethereum today is like $4,000. So if I'd not panic sold, I would have made 200 times my money.
And that's the difference between viewing it as a speculative play on price moves as opposed to looking at it as a fundamentally new form of money, wealth protection, facilitator of a new finance system, all that sort of stuff that accrues value over time. Now, the market is going to take a long time to work out where that value is, and there's the volatility is the price you pay for being in it and giving you the potential for, for massive gains over time. But, I guess these are the times where you really need to understand that this is a long-term play, not a price speculation play.
Well, you're 100% right. There is, of course, an element of speculation in all of this, because we've said this many times, we're at the price discovery phase. So although Bitcoin's goal is to be a digital store of value and an independent monetary system, that's the end goal. Are we there yet? Of course not, because there's so many obstacles to overcome, not least of which is defeating the establishment money system, which probably doesn't want that to occur. So, it makes me laugh sometimes, because I think we were talking about this off camera before. Every time there is one of these falls, the perma bears of crypto come out of the woodwork and declare it's the end. And actually, there was a chief investment officer for a superannuation fund that I follow on Twitter, came out with one of these perma bear calls saying, "Oh, 1, store of value, no. 2, useful as a currency, no." And, I didn't reply. I had to sort of bite my tongue, but I was thinking to myself, if you're a chief investment officer of a superannuation fund and you're that ignorant of the fact that we're in a speculative price discovery phase, and when you're constructing a portfolio, you weigh up risk and return. You weigh up both sides, and then as a portfolio manager, you allocate how much you allocate your portfolio. That's the way to view these things. So to make such a snide comment on a down day when we're up, 150% for the year, it just brought home to me how far ahead of we are in the curve. If someone as prominent as that still doesn't really get where we're at. But as you said, you have to accept that although Bitcoin might turn into a store of value, it is still a speculative asset right now. And there'll be a point where that changes. This is the interesting thing. If the crypto falls are a precursor for wider falls in the general stock market, and maybe a sharp pullback in some of these meme stocks and technology stocks that have been riding off the back of Fed money printing and low interest rates. If crypto markets are a precursor for that, then we might see ructions happen in the wider economy, and that's interesting, because that shows that the crypto market is now a part of the wider financial system. The fact that crypto was basically becoming part of the mainstream system in a way is interesting in itself. That was my main point I was trying to make. And right now, it is a speculative asset, but that could change over time, because the digital store of value is still a characteristic, which makes it so hard for people to judge what it actually is. It is a speculative asset with technology as part of it, but potentially it is also a safe haven store of value asset. Now we're probably erring more to the speculation side right now, but over time that could shift, and that's something to be aware of. And as someone who watches crypto markets, I'll be interested to see if we ever see that point where Bitcoin in particular becomes a kind of safe haven asset.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.